What's up, everyone? Tristan Clunas here, and welcome to the Tristan Clunas podcast. I've been calling it webinar for the past few months, but I think it's more like a podcast. We do this once a month where we get a guest on, and we've talked about everything real estate, even some stuff that are not even real estate related. But we had first-time buyer we had conversation, we had new construction, we spoke about the market, we talked about all kinds of different things. Well, today, guess what? Today, I am here to talk to you guys about investments and as little as $5,000. Now, we're going to get into the details of it because you guys are probably like wondering, what do you mean $5,000 to invest in real estate? We're going to get into it. This is the reason why I really want to bring this guy here. We're going to explain he's going to talk about all things related to what their company does in relation to real estate investing. They've been around, it's company's called Equiton. They've been around for over 20 years, over 20 years of experience.
Yep, you got it.
20 years of experience in real estate investments. And I have here Lawrence Raponi.
Yep, you got it.
And he is the senior associate for Equiton, and we're going to discuss investments as little as $5,000, but we're going to talk about all what that means and what is involved in what you guys do.
Yeah,
that makes sense?
Yeah, thanks for having me. I love the red couch. I'm happy to be here.
Yeah, nice and it's casual. You know, I did normally I do the whole jacket thing, but last couple seminars I've been, kind of keeping it casual with just a
dress
t-shirt.
it down a bit.
Yeah, it's summertime. Make it look a little nice.
You got it. Yeah,
right.
I'm with you.
Perfect. So remember, subscribe, comment below. Let me know what you think about this this seminar or the ones in the past. Make sure you subscribe. Make sure you like. They say smash that like button. Please do that. And let's get right into it.
Yeah.
So Lawrence, you having a good day so far?
It's been a beautiful day so far. The sun's shining outside.
That's important.
Business is going fantastic.
That's awesome.
Obviously, real estate's doing fantastic. So yeah, really
Awesome.
happy to be here.
Perfect. So first things first, Equiton. What do you guys do? Talk to me about your company.
Yeah, that's a good question, and it's a common question, I'll say, because a lot of my clients, a lot of people I speak to, newer investors especially, it's not immediately obvious what we do on a day-to-day. And so I always like to break it down into sort of a two-part question, so to speak. There's the what we do, and there's the how we do it, right? So what do we do? Well, we help our investors build generational wealth with real estate investments, right? Or whatever their goals may be. Maybe they're looking for a ton of passive cash flow. Maybe they're looking for a very, very high growth investment. But whatever their desires are, whatever their strategy is, we have investments at our disposal to help them achieve their goals. And that's what we do. But how we do it is a little bit different. So we really do two things at Equiton, right? And they're two sides, I'll say, of the same coin, Tristan, in the sense that they complement one another. So on the one side of the coin, we are real estate investors, right? So we raise capital from various sources, investors like you and me, and we aggregate it together and go out and acquire real estate assets with it, right? And our investors share in the profitability of these assets, both in terms of cash flow and in terms of capital appreciation.
There's a couple things that you guys, in regards to, like, especially with your company, people hear about private equity. They hear about things like REITs. We're going to get into all of that because I know my audience, there's some people that are very advanced. They know all about this stuff already. And then there's some that are going to be learning this for the first time. So I kind of want to go through, I guess, the basics of things and kind of, more definitions and then kind of explain
for sure.
What
and then
you
we'll
guys
peel
do.
back the layers of the onion.
Exactly, bro. So the first one is, what is private equity?
Yeah, sure. So at Equiton, we're what people call a private equity firm, right? And it's an equity investment because any investment made denotes equity ownership. So you are sharing in the profits of these investments. You're not giving us a loan, so you're not receiving an interest payment. It does not work like that at Equiton. It is ownership, indirect ownership, but an equity stake. And it's private because we are not a publicly traded investment. We are not on the Toronto Stock Exchange or the NASDAQ or anything like that. So when you're making an Equiton investment, you're actually doing it directly into the company itself.
Nice.
Now,
Awesome.
There's a few implications for that. So if any one of your viewers or you yourself, Tristan, have a publicly traded portfolio, so a portfolio of stocks, you'll know that in 2022, it's pretty much dropped off a cliff, right?
It has.
There's a lot of volatility in the markets today, and the reasons for that are many, right? And you can think of anything: rising interest rates, threats of inflation, who knows what city in Ukraine Russia is going to invade next. COVID was a big one for the last, what seems like forever. But suffice it to say, all of these macro market forces create volatility in the public markets. And where I come from, in the investment world that I come from, volatility is just a measurement of risk. So suffice it to say, and this is an understatement, that public investments are inherently risky.
Right.
Now, private investments are not, they don't operate quite the same as their publicly traded counterparts. Because we are not traded on a stock exchange, Tristan, we are able to circumvent a lot of the market risk inherent in these types of investments. And as an investor, ultimately what you're left with is an investment that is really more stable and more consistently performing over time. And that's the reason why not only high net worth investors, but institutions like pension funds, insurance companies, university endowments, so on and so forth, they flock to these types of private equity funds and other private equity investments because you're going to get that very competitive return, of course, no doubt, but you're going to get that return with a lot more consistency, a lot more stability, and a lot less downside risk.
It's very similar to real estate. Like if I was, well, it is real estate, but you're investing, of course, in real estate. But I'm thinking if somebody was to go out and buy a property themselves, like obviously we have markets that go up and down. Like right now, we're kind of in a market where it's kind of peeling back. We're seeing somewhat of a reduction in certain areas for prices. Mind you, prices were just crazy anyway. So even with the reduction, the prices are still very, very strong.
Exactly. But I think what you're getting at, Tristan, is market forces are changing, right? And now more so maybe than in the past 6, 7, 8, 9 years. Now, ultimately what we offer at Equiton is an alternative to an investor going out and acquiring their own real estate asset, right? So this idea here is you have a certain amount of money, you want to put a down payment on a duplex or a rental condo, whatever the case may be, you're free to do that, and of course you'll generate the returns associated with that. But in my conversations with clients, Tristan, I'll say it this way. There's a lot of hurdles to that type of investment, what we call direct real estate ownership, right? And the three biggest ones, based on my experience, is the down payment is prohibitive, especially in a market like Toronto.
100%.
Right? You need $200K, $150K to even just enter that market. And a lot of people, they want exposure to this asset class, but they don't have that type of down payment. Or they do, but they don't want to put all their eggs in one basket. Maybe $150K is all they have. Right? Maybe they don't want to put it all on a condo. Second thing is maybe they do have that down payment, and that's fantastic, but they can't get financing. Right? The banks, the Schedule I banks, not going to extend them a second mortgage because maybe you already have a primary residence. All your equity is tied up in that. Right. And third, and this is by far the most common in my conversations, is people don't want to be landlords. Right? Being a landlord is a part-time job on a good day, and it's a full-time job on a bad day. Either you don't want to be a landlord, or maybe you just don't have the skill set, right? Because when you go in alone, you're responsible for real estate valuation. You're responsible for vetting your tenants for credit quality. You're responsible for having a plumber on speed dial to fix the leaky dishwasher. Right. A lot of people either can't do that, they don't have the propensity to, or more importantly, they just don't have the time. Maybe you're a single mother with 2 kids at home. Maybe you're approaching retirement and you're trying to simplify your life, not complicate it by taking on another part-time job. And for these types of investors, a passive real estate investment whereby you're not responsible as an investor for the ongoing management may make a ton more sense. Right. You know what I'm saying?
No, 100%. So I mean, just what Lawrence is saying, people want to get into real estate. They want to become real estate investors. This is a perfect way to get into it without having to deal with all the mess that you just described.
Exactly. Right? You're going to get the exposure to that asset class as part of your investment portfolio. You're going to share in the appreciation of the assets, and more importantly, you're going to share in the cash flows that these assets generate. But you don't have to deal with any of the downside.
Fair. And who are these people? Like you mentioned that you have some high, there's some pension plans and some people that are like doctors and the whole nine.
Every firm is different. At Equiton, we have both institutional investors, so some of those firms I was just mentioning, and we also have just retail investors, people like yourself and myself that are coming to us directly through channels like yours, and they just want to learn more about real estate. They want to get started. They're not sure how. Like I said, maybe they don't have that down payment. And in terms of those investors, they really run the gamut. So I have clients of mine with private trusts, like family trusts with us, upwards of millions of dollars. Right. A few months ago, I helped a young lady with an investment. She was an undergraduate student in university, right? No full-time job, very, very little money to invest, but she knows that she wanted to start early.
She knew it was important.
And so she took charge of her investment future and her financial future, and that started with a step at Equiton.
So there's no excuses.
Really, we run the gamut.
there's no excuse. If you want to get into real estate, if it's something that you always want to do, obviously having things like credit being an issue or an obstacle, income, not being able to qualify for a mortgage, down payment of, as you said, minimum $140,000, $150,000 easily in the GTA, not even just in Toronto, in the Greater Toronto area. Like if those are your obstacles and you still want to get into real estate investing, this is a perfect way to do it. Was there a time when you couldn't do this? Like was there a time when people couldn't just invest in these type of private equity firms? Or
yeah, I mean, you're certainly right about that. So in years past, Tristan, these types of private equity firms, first of all, this whole idea of private equity had a very sexy air around it, right? Everyone wanted to be in private equity. It was very alluring. It was very mysterious. And it was relegated only for super high net worth investors and those institutions that I was referencing earlier. Now, changes in regulation have really brought that minimum acceptable amount way, way low.
How long ago did they make the
So
change?
this might have been 4 to 5 years ago, around the time when Equiton actually opened its doors back in 2015. So because these minimum requirements really dropped, it allowed all types of investors from all walks of life to participate in these types of equity investments.
Nice. That's a perfect. So I mean, we're in a very interesting time, as he said. Like there was a time when you couldn't do it. Like it was only open to the high and mighty.
Exactly.
Say, right?
And now the curtain's really being peeled back, and now it's open for everyone.
Yeah. So there's no excuses. Really,
Exactly.
I'm really going to push in this seminar. There's no excuses. If you want to get in, there are options. There are ways of you getting into real estate investing. Now, I want to touch on, you mentioned private equity. We discussed what you guys do as a firm. Everybody hears about this thing called REITs.
Yes, that's
Explain,
a super common question among my clients.
100%. So real estate investment trust.
You got it.
What exactly is that?
So,
explain that.
As your viewers may know, you can get involved in real estate investing in any number of ways, right? You can buy a pre-construction condo. You can take a more conventional long-term buy and hold approach to it, where you're just buying a duplex and putting in tenants and taking in rent. You can do joint ventures. You can really, there's any avenue under the sun now. REITs, real estate investment trusts, are another tool at the real estate investor's disposal. Typically, these are publicly traded investments, so you can buy it on the Toronto Stock Exchange. And a single investment in a real estate investment trust gives you instant, diversified, and fractional exposure or ownership in every asset contained in the portfolio. So a company might go out and acquire 25 different properties, right? Maybe apartment buildings, maybe commercial office towers, it doesn't matter. They'll bundle them all up into the fund, and as an investor in that fund, you're going to share in the profitability of every one of those properties that are in the portfolio, right? So it's a good way to get instant diversification, and it's a good way to enter the real estate space at a very low cost, because you can enter on the stock exchange as little as $50, $100, right? Now the returns won't be very high with an amount that low, but it is very, very approachable. That's really the point. We operate at Equiton in a very similar fashion. So we have 2 funds that we operate at Equiton, and they're private real estate investment trusts, but we are private. Now, and the reasons, yes, exactly. But so the reasons for that are actually I went through earlier, because really we offer more stable returns because we don't fluctuate with the volatile markets. But we operate near analogously, right? We have a portfolio of assets that is contained in the fund, and as an investor in the fund, you're going to share in the appreciation and the cash flow of every asset in that portfolio.
So this is an alternative option.
It can be an alternative, but what I'm finding with my clients is that it's actually complementary. It doesn't need to be one or the other.
Got you.
Right? I'll give you an example. And I'm a perfect example. So real estate's my passion. I've been a real estate investor for over a decade now.
Nice.
I manage about 11 doors, and I love my direct real estate investments, but to what my point earlier was, being a landlord's not my favorite thing to do, right? I have a full-time job, I have a family, I have other priorities, and when I get that call at 11 p.m.
the call at 12 o'clock at night?
It's never a nice, pleasant conversation. They're not calling just to tell me what a good landlord I am, right? And so the diversification that something like a passive real estate investment offers me really appeals to me, because I'm relying on the experts to manage these properties on my behalf. I'm obviously sharing in their income, I'm sharing in their appreciation. I don't need to worry about it. And there's real value in that for me, and based on my conversations with my clients, it's the same for them, right?
So it's exactly like it's just really having options. It
It's
doesn't necessarily have to be one or the other.
Investor's toolbox.
Perfect.
And really, that's all you really want as an investor, right? You want to have as much breadth as possible, as much opportunities at your forefront in front of you so that you can execute as needed, right? And also, the other thing I'll say is that people's priorities change over time.
Right.
So what started out as this enterprising real estate portfolio that you're building, you may want to taper that back after a while, but you still may love real estate as an asset class. And in fact, we see a lot of that. I have a lot of older investors, I'd say approaching their 50s and 60s, and some even older, where they're tired of being that landlord. They don't want to pass them on to their kids because their kids don't want to manage these properties,
right.
But they love real estate.
Right.
They don't want to give up on real estate. They just want to give up on being a landlord.
I got it.
And this is another value proposition for something like a passive firm like ours.
Have you seen them sell, like where they would take, maybe
sure.
they have a bunch of doors and they decide
they'll do full-on
to
reallocation. So they'll start to thin out their direct real estate ownership, and they'll move it over into a passive type of real estate investment, whether that's one of our 2 funds or our direct investment in land developments. And we do offer both of these types of investments.
What does that look like?
It's a good question.
That always sounds
and
interesting.
it's a very opportune time to be having this
Yes, of
discussion,
course.
Tristan, because we've just launched the project this week.
Okay,
so
awesome. Wow.
maybe it might be worthwhile to take a step back and just talk about the style of investments that we have at Equiton.
Sure,
so
go ahead.
we really have 2 different investment styles at Equiton. One, to your earlier point, is surrounding our 2 funds, so our real estate investment trusts, our REITs. And in those funds, a single investment is going to give you that diversified fractional ownership in every property. With the direct investment in the land developments, it isn't diversified. You are actually purchasing an equity stake in a specific land development project.
Right.
For instance, we are constructing a condo. Right? And so people always think, I'm interested in doing a pre-construction purchase because I'm the first person in the door, right? And I'm going to ride that appreciation up upon completion. That's actually not true. So when you're getting involved in a land development project like the one I'm describing, you are truly the first person in.
Right.
So our investors' exit strategy is actually to sell pre-construction. We are literally the first one in. We are funding the construction of the asset.
It's so funny because I'm the one that I teach that. Like I've been doing this 10 years, and when it comes to new construction, we do push the fact that, you're first one in the door. You're right. You're technically not.
Yeah, you're technically speaking number 2, but this opportunity is what gives that truly number 1 opportunity, right? And you're rewarded very handsomely in the form of profits for being that first one in. So our funds will generate on a return basis anywhere between 8 and 16%, depending on the fund, and we have 2 of them.
Nice.
The standalone development projects are much more lucrative. We target returns upwards of 20% annually. Right?
Are they more risky?
They are slightly more risky, and they're also not cash flow generative. So the first conversation, whenever I have with a brand new client, we do a back and forth. I'm asking them about their comfort level with risk, where they're at in their investment journey, just to figure out what's important to them. What are they looking for? If you're an elderly gentleman or woman and you're approaching retirement, passive income is very important to you. Something like a development doesn't really make sense.
It wouldn't be that option.
If you're a little younger and more enterprising and you have time on your side, a development is perfect for you because you're going to maximize your return in that type of development. And the beauty of it, because you can invest such a little amount across each investment, you don't have to put all your eggs in one basket. You can diversify across all 3 of our investments if that aligns with what you're looking for. It doesn't need to be a one and done type of exchange.
Would it be the same across both those funds and also for your development side, or how does that work?
So the investment minimums vary slightly based on the fund or the development. So on the bottom end, we have 2 funds, first of all. The balanced fund, we'll call it for short, has a minimum of investment of $5,000. So extremely approachable. Anyone can do it.
For sure.
The residential fund is a slightly larger fund with a slightly larger minimum, and it's only $10,000. Okay, still very approachable,
That's
especially
very approachable,
when you're talking about real estate investments, right?
We already described $140,000, $150,000 for a down payment, right?
So, and then on the higher end of the spectrum, and high is relative in this instance, but the developments have a minimum investment of $25K.
Nice,
okay?
awesome.
So
what's the max? What would be the
maximum is always assessed based on suitability. So I am a licensed dealing representative. I can sell these types of specialized private equity investments. It's really up to me as the DR, as we refer to it, to determine what makes sense for our investors. We're at the forefront of my job is to make sure that an investment is suitable for an investor. So if all you have to your name is $5,000, I can't take every penny you have and put it in one of our funds. Right. That's not the prudent thing to do. I'm not representing my client's best interests.
Right.
So part of my job at Equiton really is to play the role of the educator, right? We're having a conversation. I'm getting people caught up as to what their options are. if they do want to proceed with an Equiton investment, my role shifts to more of that of the advisor,
Nice.
where I'm picking apart their situation, I'm determining what they're looking for and what would suit them, what wouldn't suit them, and I would advise them accordingly.
And how long are they typically keeping their money into these investments?
That's a great question. So earlier we were discussing the merits of a private investment, the main benefit being you're going to get a very competitive return for a lower degree of risk relative to some other investments out there.
Right.
Now, that is the positive, and there is a downside to private equity as well. Generally speaking, private equity investments are illiquid investments, which means you can't move in and out of them very, very quickly.
Right.
And that should make intuitive sense to any real estate investor. I mean, if you wanted to sell your Tesla stock, Tristan, it's very simple to do. You log into your trading account with a few clicks of the mouse. You can. That's it. Very simple.
Not the same. We're selling a condo.
You can't day trade a $40 million apartment building. It's not possible. And so we have minimum investment periods on our funds to reflect the fact that these are longer term investments.
Right.
And that minimum investment period is 5 years.
5 years. Okay.
Okay.
And typically, and that's usually the average. What would you normally find that your clients are kind of staying in there?
Oh, I would say
on average. I know it's kind of hard to say.
I process very, very few redemptions on an annual basis or monthly basis. We really don't see it. A lot of our investors, and again, it's part of the coaching and the education we provide, they understand well and good that these are longer term investments.
Nice.
If a client came to me and said, I'm looking for a 4-year investment, we would stop the conversation because this doesn't make sense for you.
Yeah.
Right? And so the majority of investors that do end up proceeding with an investment for us are very, very happy to invest for the 5-year minimum. And at the end of the day, Tristan, we're talking about real estate.
Yeah.
Real estate in general is a longer term investment. And so there's just a natural fit to a longer hold period.
I've been preaching this for a while. Obviously, with what was going on over the past couple of years, everybody got into the whole speculating part of real estate where you only hold it for like a short-term I've been saying, and funny enough, my mentor has been teaching me for years now, buy and hold is the best, by far, the best strategy in real estate.
It is.
That is
you're insulated from some risks.
Yes.
And you know what? Flipping can be very, very profitable.
Yeah.
It's also very, very risky.
Very
so
risky.
You need to know what you're doing. You need to have a network of contractors at your disposal that are going to do the job quickly and at budget.
Right.
And insofar as anything falters in there, or if the market turns against you, like you're left holding the bag.
100%.
It is in fact a riskier type of investment.
Well, we're seeing it right now, Lawrence. We have people. There's people that are out there right now that bought, thinking that the market's going to continue to just fly, like just continue to rise and hike. And they're in a very, very tough position right now because the market has changed and it's corrected, rightfully so, because our market was just insane and it needed to correct. It was unsustainable. But they're finding themselves in a very different position than they were back in February, back in January.
And no one saw it coming, even though the writing was on the wall, because we've been talking about raising interest rates and the threat of inflation. Right. Is it transitory? Is it not? We've been talking about this since last June.
Yes.
And here we are.
Right.
And so
it's funny, whenever it hits, you just always, when things are great, you always just think it's always going to be that way.
Exactly.
It's unfortunately not the case. Well, it's still good right now, but yes, these situations when we're in a type of market like this, and just in general, look to buy and hold. This is
exactly. I think we're speaking specifically about a flip strategy. Whenever you're using speculation, again, it gets a little riskier. If you're going to hold on to your asset, whether it's a personal residence or a longer term investment for the long term, then the best time to invest in real estate was yesterday. It always, always will be.
Right.
But you need to understand that you need to have time on your side to have that roll out and have those profits come in.
Awesome.
Right?
So I just wanted to just touch, because I know that obviously people here, when it comes to REITs, they hear about using their RRSPs or using the RESPs and all that stuff. What is that like with Equiton?
Yes, so it's an extremely, extremely popular choice. I would say the vast majority of my investors use their registered accounts.
Just walk through, if you could just walk through that.
And that is one of the benefits of these types of investments, whether they're publicly traded REITs or any Equiton investment. You can use your RRSPs, you can use your TFSAs, LIRAs, RESPs if any investors have children. We can also do corporate investments. We can do joint investments among spouses or business partners. Really, however the investor wants to structure their investment, we can accommodate. And you really, simply put, you cannot buy a bungalow or a duplex or a condo with a TFSA.
Right.
But if you like real estate as an asset class, you can still get exposure to it in a safe way through an Equiton investment.
Why would somebody take their RSPs that they have with work or wherever and take that into
For sure.
Like
a lot of people I speak to, especially with RRSP investments related to work, they've maybe been at a firm for a quarter century, 25 years. It's been building up, and they're building this very, very concentrated position. Maybe you work at one of the big 6 banks. Now you own 70 grand worth of bank stock, whatever it may be. you're very, very concentrated into one asset class.
Right.
It behooves you as an investor to maybe take some of that out, not all of it, and just diversify, because the fact is there are so many other very, very strongly performing asset classes out there, like real estate, that you can get exposure to with these accounts.
And how does one buy it? We talked about the fact that you can get in as little as $5,000 with some of your funds. Some of them are 10, some of them are 25. What does that process look like?
Every firm is different, but I'll tell you how we work at Equiton. Sure. So one of the value propositions of Equiton is that we run a very, very personal business. So I'm in the business of providing investment solutions to investors, but I'm in a people business. I'm in the business, really, of helping my clients achieve their financial goals. That's my job, and I treat my job like that. It's a very personal, frankly intimate kind of situation, because I'm learning about people's personal wants, their desires, where they want to be in 10 years from now, so on and so forth. So suffice it to say, any investor that comes through Equiton's door, if they speak to me first, they're never going to speak to anyone else at Equiton. They're going to work exclusively with me. It's very similar to like a private banking relationship, we'll say. So it always starts with the conversation. One, because I want to learn more about the client, and two, because, again, I am effectively an educator. That's my job. So I need to bring them up to speed as to exactly what this industry looks like, what their options are, the good things, and the risks as well. We go through everything. If it's determined that this suits what they're looking for and we proceed with an investment, everything is done through me. We do a little bit of a questionnaire, because I do need to qualify some investors. Now, the qualifications, as we said, they've since come down in the last 5 years, but we do need to go through that. And
it's for their benefit as well, of course,
exactly. Right? It's ultimately for their protection, right? And that's it. So I would process that investment for them, and I am their main point of contact. My work phone goes in their cell phone. If they ever have a question about their investment, they pick it up, they call me. I take calls after 5 p.m. I take calls on Sunday mornings. Whereas if you have a question about your stock portfolio, you call RBC or TD, you're going to be on hold for 15 minutes, then you're going to speak to somebody that you've never spoken to before. They don't know your personal situation. They may or may not have your best interests at heart. We don't run this way. It's a very, very personal type of engagement. Awesome. And our investors appreciate that, because at the end of the day, Tristan, you're dealing with people's life savings.
100%.
Right? And that needs to be respected, and we do that at Equiton very effectively.
That's awesome. So, how can they get in touch with you?
For sure. So I would always tell anyone who's interested, please go to the Equiton website, www.equiton.com.
Nice.
You can go under About Us or look at our team, and you'll see my beautiful photo there, we'll say. And my email address is, I'm not sure if I can say it out loud, if we can post it to
we'll post it. We got it covered. We got guys for that.
Perfect. So if you guys are interested in learning more, please reach out to Tristan yourself, and I'm
you have your socials as well, right? You're going to give me
of course. I'll give you I'll run down the whole gamut. But even if you're not sure about an investment, you just want to learn more about the space. Again, a lot of my conversations are just as an educator, and I love real estate. I'm passionate about this asset class. I'm happy to just have the conversation. Right?
No, I would love to do. I'm realizing that we're probably going to have to do this again, because
for sure.
I'm going to get a lot of questions. A lot of people are going to be asking a lot of questions, because it's funny. I obviously I sell real estate, buy and sell real estate with my clients and invest, but this is a great opportunity because there's so many people that want to get involved in it. There's so many people that love real estate like us. They're dying to get into it, and they don't have any other options other than, they don't think they have any other options other than buying, the condo or the house or whatever the case may be. In this situation, you could still get involved. As again, Lawrence said they have funds as low as $5,000 as a buy-in, $5,000, which is, a lot of people, if you were to just cut back down on certain things over the year, you can
stop
save.
Buying a Starbucks a day.
Exactly.
You have $5,000.
You'll have $5,000 ready to go, right? So why not take it out of the Starbucks and go ahead and invest it in your future, invest it in generational wealth?
That's right.
That's awesome. Any other things that you want to just throw in there or plug?
No, I think I'm really good. I think we covered a lot of the things that I thought we should cover, and I'm looking forward to speaking to anyone that's interested in educating themselves a little more about real estate.
That's awesome, and of course, you guys have my contact information is at Tristan Clunis for all socials. We're gonna make sure you make sure you subscribe, make sure you comment, reach out to Lawrence. I'm gonna obviously build a relationship with him to make sure that for my clients and the people that come to me that they're able to contact him, no problem. Thank you so much for coming by, man.
Much, Tristan. It was a pleasure. Appreciate it.
And again, remember everybody, if you're clueless, ask Clunis. Have a great day.